Good afternoon and thanks for joining me. My name is Tom Sommers with Coldwell Banker Burnett. I'm a licensed real estate agent in the Minneapolis-St. Paul metro area. Today I'd like to answer the question, what are home buying closing costs? It's one of the very first questions a home buyer will ask me as they start their search for their new home. I'm going to speak in very broad terms today because there are so many variables that you can't count on right now, depending on what your credit score is, what state you live in, who you're using as a loan officer or bank to get your loan. So we're going to speak in very general terms to give you an understanding of what they are, and then I encourage you to sit down with your loan officer or bank to get detailed information and down to the dollar type of ideas as to what it's going to cost. So the most common scenario that I see, whether it be a conventional loan or an FHA loan, is about 3% in closing costs. So if you are going to try and purchase a home, say for $200,000, 3% of that would be $6,000. That's your closing costs. Closing costs are made up of a lot of different fees, but they're basically broken in half. The first half are all lender fees. Some of it goes to the loan officer and the bank for initiating the loan, but there's also other fees that are rolled into that will work towards getting you to closing. You're paying for your closing agent, the title company to do all of the title search. There's a loan origination fee for the bank or the loan officer, and all types of other tasks that you get charged for that make up that amount. Now, the other half typically is escrows. Again, this also depends on the time of year, the state you live in, your credit, all of that. Every lender is going to be different. So typically what they want to do is they want to establish an escrow account in your name. So when you make your first payment, the payment consists of your principal, your interest, taxes, and home insurance. So each payment you make is 1/12 of the full year payment. So depending on the loan officer or the lender, they may want to establish an escrow account with 4 months or 6 months worth of money in that account to start it for you. So that's where the other half of the 3% typically comes from. Depending on the time of year, if you are closing and you are prorating your taxes to the day of closing, you're going to possibly owe some money to the seller who've already prepaid part of your taxes for the year. So these are the types of things that make it up. The biggest concern a lot of buyers have is they don't want to pay these closing costs because most of them maybe have the 3.5% down to get an FHA loan, but they don't have the additional 3% for closing costs. So you can ask the seller to pay the buyer's closing costs, and that gets negotiated up front when you're negotiating the purchase of the house and you're talking about closing date, purchase price, all of the different appliances that they're leaving, and anything else that you're negotiating. So it is a possibility, and it makes it a legal way for you, the buyer, to roll this into the loan so that you don't have to bring that extra money to the closing table and you only need to bring your down payment. So closing costs are one thing and down payment is completely different. If you want more information about down payments, I have audios on that as well. Please feel free to reach out to me if you're in the Minneapolis-St. Paul metro area with any questions. I'm happy to sit down and talk with you. All of my information's on the screen, so you can get it there, or you can look for me at tomsummersrealestate.com. Thanks for tuning in. I hope this answered some of the question, and you have a great rest of your day.